Next month in February, you can get paid from some amazing companies like Proctor and Gamble, Lowe's, and StarBucks, as well as about 15 others. But in order to collect these paychecks and be eligible for these dividends, you need to buy these stocks before their ex-dividend dates, many of which are coming up this month in January, and there's also a couple in February, so you have some time. But we are going to lay all of that out in this video to make sure you don't miss out on any cash flow. But first, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Now moving on, the first couple of stocks going ex-dividend here in 2023 are Universal Corporation and MasterCard, here both on the 6th at the end of the week. And starting here with Universal Corporation, which has a whopping 6% yield and is a dividend aristocrat with 31 years of consecutive growth. For every share of this company you own, you'll be getting 79 cents, which will be paid out to you on February 6th. And now moving on to MasterCard, who is definitely lacking in the dividend yield department. Their yield is only 0.66%, but they more than make up for it with their 5-year growth rate of over 17%. For every share of MasterCard you own, you'll be getting 57 cents, and that'll be paid out to you on February 9th. And then after the weekend, as we move into the second week of January, we can see a little more action here, starting with Verizon and AT&T on the 9th. Now, Verizon's dividend yield is out of this world, currently sitting at 6.6%, which is about 42% higher than their 5-year average. And they also have a nice dividend growth history of 18 straight years. Now, for every share of Verizon that you own, you'll be getting 65 cents, and that will be paid out to you at the very start of the month on the 1st. And now moving on to AT&T, whose dividend yield is also over 6%, they'll be paying out on the same day, February 1st, and for every share of AT&T you own, you're getting 28 cents. And sticking with AT&T for just a moment, I was very surprised to find that this was one of the best performing stocks in my portfolio in this last year. As you guys can see, they were up 30.25%, definitely outperforming the market, and they are the best performer on our list of stocks today. Anyway, moving on to the next stock, we're talking about AbbVie, who has a very nice high 5-year growth rate, over 17.25%, and they're going ex-dividend on January 12th. And for every share of AbbVie you own, you're getting $1.48, which will be paid out to you in the middle of the month on February 15th. And AbbVie is another one of those that just dominated the market this last year with a gain of about 19%. Unbelievable. Anyway, moving on to the next stock, we're talking about Abbott Laboratories, which actually spun off AbbVie back in 2013, and they have the same ex-dividend date, January 12th. And for every share of Abbott Laboratories you own, you're getting 51 cents, which will also be paid out to you on February 15th. And now, I don't know how superstitious you guys are, but this 7th stock we're talking about, which is Hormel, is going ex-dividend on Friday the 13th, which is no bueno, but everything else with Hormel's looking good. They have 21 years of consecutive dividend growth, and for every share you own, you're getting 28 cents, which will be paid out to you on February 15th. Now, real quick, in case you're wondering where all of this info on these stocks is coming from, I'm getting it from seekingalpha.com, which is my go-to stock research platform. You'll see it in pretty much all of my videos. And while the free version is fantastic and works well enough if you're just looking up stock prices and dividend stats, kind of like what we're doing here, you can really take your investing to the next level by upgrading to Seeking Alpha Premium, which gives you access to exclusive features like the ability to track buy, hold, and sell ratings on any stock. You can automatically sync your portfolio for easy analysis. You can set price alerts so you'll be notified when your stocks are in buying range. You can listen to earnings calls, follow along with the transcripts, and see all SEC filings in one place. And you can get access to 10 years of financial data for any stock, along with unlimited access to Seeking Alpha's endless library of articles, stock analyses, and news updates, which honestly, that alone is worth paying for. And the best part is, Seeking Alpha is currently offering a free 7-day trial with 50% off of your annual subscription, which means you can try Seeking Alpha Premium for only $119, where normally it's $239. So click the link in the description for more details and to save $120 on your premium subscription to Seeking Alpha. And now jumping back over to the calendar, we've got 5 stocks going ex-dividend in the 3rd week of January, starting with CVS, Caterpillar, and Williams-Sonoma on the 19th. Now with CVS, for every share you own, you're getting 61 cents, which will be paid out to you on the 1st of February. And just taking a look at their share price performance real quick, CVS really has not had a great month. They are down 7.15% in the last 30 days. And in the last year, they've seen a 10% drop, which has their PE ratio there on the right-hand side of the screen getting pretty close to being in the single digits. Anyway, moving on to this next stock, which is Caterpillar, a dividend aristocrat with 29 years of consecutive growth. For every share of this stock you own, you're getting $1.20, which will be paid out to you on February 17th, which is actually my little brother's birthday, but he is not a shareholder, unfortunately, so Caterpillar will not be sending him a birthday present this year. And to be honest with you guys, it's his loss, because Caterpillar's a great company, and they've just dominated in the last year, where they've seen a gain of about 16.25%. Pretty crazy. And now jumping over to Williams-Sonoma, a very high growth dividend stock with a 5-year CAGR getting close to 15%. 15%, but they're also going ex-dividend on the 19th, and for every share of Williams-Sonoma you own, you're getting 78 cents, which will be paid out to you on February 24th. And unlike Caterpillar, Williams-Sonoma just got wrecked this last year where they are down over 32%, but look at that PE ratio. It's nice and low in the single digits, just below 7. And now moving on to the next stock here, we're talking about Colgate-Palmolive, who has not yet updated their dividend stats for the quarter. It says they have an ex-dividend date on October 20th, but if they're sticking to the same schedule, they should be going ex-dividend on January 20th, and hopefully will be paying out on February 15th. But anyway, for every share of this dividend king you own, you'll be getting 47 cents. And next up is one of my favorite companies, Proctor and Gamble, a dividend king with 66 straight years of growth, but they've also not updated their dividend stats yet, and it's the same exact story as Colgate-Palmolive. However, for every share of Procter and Gamble you own, you'll be getting 91 cents per share, and I'm very much looking forward to getting this dividend payment, I'll tell you guys what. And then to close out January, we've got 5 more stocks with ex-dividend dates here in the 4th and 5th weeks of the month, beginning with Lowe's and Clorox on the 24th. And taking a look at Lowe's, a very high growth dividend king with a near 20% CAGR in nearly 60 straight years of growth. For every share of Lowe's you own, you're getting $1.05, which will be paid out on February 8th. And now moving on to Clorox, who is almost a dividend king with 45 straight years of growth. For every share you own, you're getting $1.18, which will be paid out to you on February 10th. And now moving on to the next one, we're talking about Enterprise Products Partners, ticker symbol EPD, who is a high-yielding master limited partnership MLP with 23 years of dividend growth. They still haven't updated their dividend dates for the quarter yet, but if they're sticking to the same schedule, they will not be going ex-dividend on the 28th of January because that's a Saturday, so I have them going ex-dividend the day before on the 27th. And for every share you own, you're getting 48 cents, which hopefully will be paid out to you on February 14th. And EPD is another one of those that saw some really nice returns in this last year with a double-digit gain of over 11%. And this next stock here, which is Texas Instruments, is seeing a similar debacle with the dividend dates. They should be going ex-dividend the same day as EPD on January 27th, and they should be paying out on February 15th. And for every share of Texas Instruments you own, which is a very high growth dividend stock, as you can see, you'll be getting $1.24. And now moving on to this next stock, it's the last one going ex-dividend in January. We're talking about Ally Financial, who has a very high 5-year growth rate, about 24.5%. And they've also not updated their dividend dates yet. So they should be going ex-dividend on January 31st. And for every share you own, you're getting 30 cents, which will be paid out to you on February 15th. Now, out of all 19 stocks that we're talking about today, Ally Financial has seen the biggest drop in the last year. You guys are not going to believe this. Look at that, 48.62% in the last year, and they are definitely right there at their 52-week low. So I know a lot of you guys out there have been buying Ally Financial, and it seems like a good time to do it if you are, because that drop is pretty unbelievable. And with that, guys, there are 2 more stocks who will be paying you dividends in February, but as you can see, their ex-dividend dates are also in February, so you've still got some time to load up on your positions here. The first one is Citigroup, who has not updated their dates yet, but they should be going ex-dividend on February 4th and paying out later that month on February 23rd. And for every share of Citigroup you own, you'll be getting 51 cents. And last but not least, we have Starbucks, one of my favorite stocks, who's going ex-dividend on February 9th. And for every share of Starbucks you own, you're getting 53 cents, which will be paid out to you on February 24th. And with that, guys, now that you know about all of the stocks to buy before their upcoming ex-dividend dates, you're going to want to learn about these next 3 stocks right over here that I think are some of the best ones to buy right now in January. So check them out right here, and I'll see you in the next one.